Good afternoon, everybody. Welcome to TraderMerlin Show for your Monday edition. Good to have everybody with us. I see we've got Landis joining us. So Landis, hello. Thank you so much for the wonderful Japanese whiskey. Katut, good to have you. Mario, Siraj, Vernon as well. Margaret, you love the graphics today. I was trying to have a little bit of fun with that one, so I figured, you know, one of the best bands of all time is Led Zeppelin. So we have a nice, I'm sure, copyright infringement font called The Fed. The song remains the same. Good to have you, Chris, David as well. And David, I got your email. I'll bring it up in the CIL tomorrow anonymously, no matter what. And we got Boss and Terry and Les Gold as well. Good to see you, Tom. And NJ. All right, the song remains the same, I guess, for the show as well with our regular group of attendees. All right, 22nd of February today. February? What month am I on? Thanksgiving. We're in November. Goodness gracious. So as we walk through this week, I'm not sure actually how many shows I'll be doing this week. I've got all kinds of weird schedule conflicts and, of course, Thanksgiving. So most likely no show Thursday, Friday. Still debating on Wednesday, but we'll see what we can do. I'll try to my best to get the Monday, Tuesday, and Wednesday in place for you. Now, one thing to pay attention to for the upcoming trading week is liquidity. Volume generally gets really slow. So what happens is a lot of people take extra long breaks. We take the whole Thanksgiving week off, and therefore, going and traveling, which means you tend to see less institutional involvement. Granted, it's still there, but just the volume's a little bit lower. They're kind of like on maintenance mode as opposed to full active trading mode. So we get charts that look like the ones we saw today, which we'll, of course, check out here shortly. So I'm going to start things off by kind of really running through the top 6-7 markets that we look at normally, and then I'll go into some listener questions, which will help steer the show. All right, so here is our chart of, let's see what we got. We'll go best performer first, so that's certainly not going to be the NASDAQ. Best performer, and I guess rightfully so. It almost, I thought it would actually stop a little bit sooner, but we had crude oil bouncing to the tune of 0.65%. Today, making it one of the only positive markets out there. Surprisingly, $67 per barrel. Sorry, $76 per barrel is what we ended up with for crude oil today. You can see if we were to draw our boxes in here, you've got the big trend, a pullback phase, and then a breakout. A lot of people were expecting this breakout to be stronger. I did as well. Now we got our pullback, and we'll see what happens here. Does it hold this kind of breakout level and move to the higher side? It certainly was higher today. Dow Jones Industrial Average is the only other one that was slightly up. And notice it looks very similar to what you saw with crude oil, which was that breakout, a nice strong breakout, and then now we're retesting. We're right in that area that we saw the breakout happen back in October, and that's where we stand right now. All right, keep on going down the list. S&P 500. Even though it had a negative down day, it really wasn't that bad, down 0.26%. I'll break apart the smaller time frame here in just a minute, as I know some of you want to see the wonderful sell-off. I think Naum might be here with us today, and he was asking about that too. He's like, hey, wait a minute, what about this big sell-off? All right, let's see. From there, we go to the Russell, and things get a little bit worse with the Russell. Granted, I think this is, again, more of a breakout and a pullback. Do I extend this yellow box over? Personally, I wouldn't do it. And one of the main reasons, this is a question I got from multiples of you over the past few days since we've broken out, is when we have a breakout above this ceiling, which I'm using this ceiling as a reference point for supply in the marketplace. Once you go through that, in theory, you have eaten through whatever supply was there. Whoever placed sell orders, doesn't matter how big, how small, they are now officially gone, evaporated, and even you notice that this yellow box, I had it to these peaks that go into June and July. I really could have included this peak that went in here in March 15th, a little bit higher. But even if I did that, we can see that move was higher than all of that. So to me, whatever supply was there is officially gone. Now the question is, does demand end up showing up here and end up holding that line in the sand for the bounce? Well, time will tell. Right now I have to wait and see if that in fact is going to happen. But I wouldn't be drawing another yellow box here, at least until maybe we get down in the middle of it and start doing more range-bound stuff. But for right now, I'll leave that box right where it's at. All right, now we start to get to the ugly stuff. NASDAQ. Tech stocks taking a little bit of a dump today, down 1.11% for the NASDAQ 100. Now, granted, we saw a candle like this about 8 days ago, so it's not that big of a deal. It's, do we get follow through? Do we see some nice momentum change where things really start to sell off? And again, only time will tell there. I do not have a crystal ball. As you guys have seen, sometimes I'm right, sometimes I'm wrong. At this point, the trend is still strong. As much as I want to pull back in a market correction and crash, probably statistically not going to happen until January. All right, back to gold, the G to the C. Now, this one's rather interesting. You know, we talked about this kind of descending triangle that gold was in for the better part of 8-9 months, and now all of a sudden we're coming back and retesting that downward trend line. So a lot of people will look at this as a potential buying opportunity on gold. I like how quickly it sold off today. I did not sell any puts on gold or silver, but I may do that over the next couple of days. I tend to, on a personal note, I tend to not trade holiday weeks. So actually not holiday weeks, because like 4th of July, I just don't trade the half days. I'll never trade a half day. But on a shortened week where you have like Thanksgiving or Christmas, those are 2 weeks I generally do not trade. That said, I said generally, it's never absolute with me. I will probably be trading tomorrow. There's actually a couple of chart patterns that I really like for tomorrow, which I'll share with you as we progress here today. And I'm going to have to get up early for these ones or set some bracket orders, which I'll probably do because I hate getting up early. But there's some pretty tasty bearish patterns forming on 2 securities that I can trade. So I'll let you know about those here in just a second. November and December, actually, I had all the statistics written down. I think you're right. They're going to be good months normally. And there's an old adage out there that says everything works until it doesn't. So it could very easily turn, and all of a sudden we get 2 ugly months. You know, who knows? We have a whole different set of variables, in my opinion, right now. We have a rising rate environment. We have a Fed who, you know, is starting to visibly express their concerns for inflation in markets going forward, which means we have to pull back money supply, we have to raise rates. Those are 2 things that normally are big heavy hitters to the negative for the equity markets. So, you know, we're facing a different market than we did at any point over the past 10 years or so with regards to what we're seeing in our financial markets. Doesn't mean we're not going to have a good November and December. You know, I still play the odds, and the odds say November and December are going to be good. But just be careful. Everything works until it doesn't. Marcus, does that hold true for crypto, which is fairly new market, not trading holiday weeks? No, I'm more of a buy and hold with crypto anyway. I'm not really that active. The commissions are still pretty high with those, so I'm trying not to trade as actively. But normally Christmas is a good period for cryptocurrency. So I have a plan mapped out, which I've talked a little bit about in our Crypto Investor Live program, where I'll be making a lot of transactions near year end in the crypto space, and then waiting to see how the beginning of the year trend pans out. Where can you see Powell's holdings and other Feds? I don't think that you and I have access to that. They are required to file their holdings. There's certain. Jerome Powell's been pretty transparent about what he holds. You know, he was talking about how he always shies away from individual stocks. It's a blind trust. He does own municipalities, which, you know, the reason he bought I love this interview piece. They asked him about it, and Powell says, I've been buying municipalities for years and years and years because the Fed, you know, doesn't do anything with municipalities. And then all of a sudden he went on to say, but now we're buying municipal bonds to help out the markets. It's like, so you do own the securities that you are now supporting, which to me is... It should be an illegal activity, but anyway, no, I don't know where you could go see specifically their holdings, and I think that this should almost be a law, a federal law, that any elected official has to have a transparent portfolio. Do it on the blockchain. Allow me to log in and say, oh wow, right now, Baynard's got this portfolio. Oh, here's what Powell's holding. Oh, here's what Bernie Sanders has. I want to look and see what everybody has, independent of party or political affiliation or religious preference, doesn't matter. Just what the hell are you holding? And that would definitely help steer our markets. That's a huge competitive advantage for these elected officials, whether that's the Fed or your senators, congressmen. Massive advantage because they know which way they're going to steer these markets. Anyway, don't get me down that soapbox. So I had one more. We're looking at we're looking at gold down 2.54%, but equally as ugly and even worse today, Bitcoin the whole crypto space actually taking a real big gut punch today. I expected this to happen. I kind of thought that the bounce we had yesterday was not that substantial. I was really thinking we'll see more of a pullback. That said, I did buy some more Bitcoin at 57,000 and at 56,000. So I'm adding to my Bitcoin positions. But I still think we're going to be heading lower, which is fine with me because, again, I'm long-term with regards to Bitcoin. But I'll show you just the my list of Bitcoin or cryptos here that we follow. You can see we really only have a couple that are positive. Avalanche is one that's my portfolio is up 8%. You got Civic is up 0.29%. And then everything else, I mean, pretty negative stuff here, all the way down to, Chainlink down to about 8% on the day. I just recently bought some more at 28.10 on Chainlink and a couple of these other ones here. So, we'll see how deep this sell-off goes. My guess is you could see potentially, I mean, this is a real stretch, but Bitcoin going as low as about 41. You can see this nice big demand zone where it just ripped out about 41.50. That'd be a long drop from here. I don't think we'll get that low. I think we're pretty close to the depth of pullback, maybe a little bit deeper, but that's the ultimate point there, which I think would be about 41.5. Okay. Let's see. Let me go into some listener questions. I only had a few of them today, which will help steer the show, as usual. Again, love my graphic. And it's kind of convenient. I actually took a picture, this is from Google, and I just right mouse click on this Federal Reserve building, which is all white, and I removed the white, and I left this really kind of cool Fed silhouette. It almost looks like it could be in a Led Zeppelin album cover. So there you go. So, what do we want to talk about with regards to the Fed? The song remains the same. Well, and this is interesting for today's market activity. You saw an aggressive sell-off in the S&P, NASDAQ, Dow, Russell, right as that announcement came out. It initially started with a nice move to the upside where, markets don't like change. Markets like things to be consistent where they know what's going to happen. They have a history with this, either individual or CEO, whatever it may be. And what we had happen today was, obviously, President Biden saying he's going to nominate Powell for his second term. And there was some track about Lael Brainerd being nominated. That, obviously was dispelled as soon as he made the announcement. And if we look at the price charts here, let me bring up your price chart for intraday of our markets. Let's go and look at S&P, since this was specifically a question from a viewer. And I'll go change this to a 5-minute time frame. You notice that, as the announcement was going on, markets are moving up, but then, it comes crashing down, and you got to ask yourself, well, why is that, right? Why would these markets really crater as soon as they found out that Powell was going to be renominated, right? Let's see. This is the question from Nago, and I think I paraphrased it. It says, today's sell-off, what causes this? That's a great question. And when I think about it, I did spend a bit of time thinking about this one, because if Powell was nominated for his second term, you would think the markets would reward that and be like, great, because Powell's been extremely transparent. He's been very forthright about, hey, we're going to do this and this and this. Almost overly transparent in my opinion, but that's okay. So the market kind of has a read on how Powell acts and the current administration there. So you would think that by him being renominated, we would actually see markets move to the upside. Now, I don't know. I'm not as big of a geek. What you could look at is somebody like David Warner. David Warner is an absolute maniac when it comes to Federal Reserves around the world. Like, he has autographed pictures of the, last 4 or 5 different chairmen of the Fed. He's into it. He loves that stuff. And he might be able to tell you, does Lael Brainerd have, maybe a more aggressive stance with regards to rate increases than Powell, or vice versa, right? Maybe Powell's stance, which would be 2.5 to 3 raises in 2022, right now is the forecast. They're saying we have 2 to 3 rate increases in 2022 under Powell. Now, maybe Lael Brainerd, who people thought was going to be nominated, maybe she was thinking, well, we'll maybe do 1 to 2. And that might be a little more bullish for the market. So the fact that she's now off the table and we got Powell, maybe a lot of institutions looking at it going, oh, shoot, you know what? I'm taking some money off because it's going to raise more with Powell than it would under somebody else. So I think that might be part of it. Also, as we go into the holiday season, as we go into the year end, these markets are long in the tooth. when I say long in the tooth, I mean, you guys all see it. You've been with me every single day for the past almost 2 years now. By the way, I think today is the 200th show of this year. I think I did 190 shows last year. We did 200 shows this year. You realize that even people like Jimmy Kimmel, Jimmy Fallon, Jay Leno, all these guys, they don't do anywhere near 200 shows a year. Anyway, I'm better than they are. So, when I say long in the tooth, just look at that price chart. That's just since 2020. If I go to a weekly here, this has been everybody drinking that Kool-Aid. And all the way back into 2009 when we really bottomed out, I mean, it's been an unbelievable rally. Literally the thing of historic, textbook worthy gains. And just so we can see, let me draw it on here and so we can see the exact percentage. It's going to be a couple percentage points off because it doesn't have a CliK mode. But, you look from where we started in 2009 to where we're at right now, you're looking at a market gain of 600%. You know how much paper profits that's created for not just Americans, but people all over the world? I mean, that is massive. That does not happen. You don't see in a 12-year period of time markets move that much. It just doesn't happen until now. The second part of this is obviously in that period of time where we look back 665 weeks, we moved up 600%. But even more aggressively is what we've seen here in 116% in just 88 weeks. So under 2 years, seeing over 100% gain in the markets, that's pretty unbelievable, right? Pretty crazy. So, I don't have a definitive answer as to what officially caused it. And I think that's the beauty of these markets is sometimes we'll just never know. We'll never know exactly what causes. But I think it was maybe people expecting there to be a change under the Biden administration, right? So Powell was Trump's guy. Now let's move on to Biden's guy. Oh, he picked the same person, right? I think there was an expectation that they would change, and that didn't happen. So I think the markets sold off a little bit because of that. But then again, when that happens, you start to get some follow through, right? You start to get that chain reaction where selling starts. And remember, as I mentioned, it's generally a lighter week. So let me see if I can throw volume on this price chart for you guys, which I can do. And I'm going to bring up SPY, not the futures. We'll do SPY. And you can see here on the weekly, volume seems lower than normal. If I go to the daily, today seems a slightly higher volume day than what looks to be about averages, right there. Then you look at the 5-minute chart and look at the volume in the last 15 minutes of the day. This is pretty bad. I mean, when you see something close almost at the dead low after a fairly aggressive sell-off. Now, granted, it's not like it dropped 10%, right? If you look at where that peak to trough was, it's only a 1% move. So this isn't like, oh my God, the sky is falling, run to the hills. That's a Judas Priest album, right? I think, run to the hills. Going to heavy metal today, Led Zeppelin and Judas Priest references. Pretty soon I'll bring in some Cyndi Lauper and Sinead O'Connor and call it a day. All right, no caffeine for me today, folks. So, I don't think that this is that dramatic. It's just, when you see stuff happen like this, where all of a sudden you're getting a nice bullish uptrend, higher highs, higher lows, and all of a sudden the rug gets pulled out from underneath you, that freaks a lot of people out. I think that you'll probably see more weakness the remainder of the week. Granted, it's going to be lighter this week. It should be, okay? Yohan says, beautiful supplies on the 5-minute. Well, I mean, I don't disagree with you, right? Now, most people don't call Bob Dunn. Everybody, do not call Bob Dunn right now because he would just lose his freaking mind if I said, do you guys see the supply zone here on the 5-minute time frame? He'd be like, oh my God, you can't use the supply zone on a 5-minute chart. Are you crazy? No, Bob, you're crazy. We love you anyway. But yeah, right, you had that base drop, aggressive, kind of early in the morning, rallied right back up to it. Trading's not easy. But when you follow plans and you look at patterns and you look at stuff like this, this is one that after the fact, I'm willing to bet you, I'll bet anybody here any money that my most favorite trader, who I could say with the most cynicism I possibly could, out of Chicago, who has his own trading school, which I've heard some pretty negative things about, he will show you this chart and be like, oh, we called it. Yeah, we called this. Yep, we called that level. Yep, we made this trade. Yep, Yeah, you know what? Show the trades. Show the trades that you take as opposed to just telling people you took trades, right? That's what got people in trouble in the past. This might get Bob's attention. Now, that 5-minute time frame, Bob would just leave that one totally alone. He doesn't even look at 5 minutes, or so he says. Anyway, I believe that markets are fractal in nature, folks. If I took this watermark off here and said, hey, this is a daily chart or a 5-minute chart, honestly, I'm going to try to trade it the same way. I'm going to try to take it the same, trade it the exact same. It's just to understand that if this is a 5-minute chart, my stop losses are going to be most likely a lot smaller than they would be if this is a daily chart. So, we have to have wider stops to make greater rewards if you're using bigger time frames. But I agree with Bob, bigger time frames are where the money is. Do you show the Sheriff? I didn't take this trade. But if I do take trades, I'll show them. No problem. But I'm also not one who's trying. Here's the big difference between me and the horrible individual from Chicago is I'm not trying to sell you anything. I'm not selling you anything. I mean, granted, if you guys are interested in education, you can always go and check out the company that I work for. But I'm not trying to sit here and sell. I'm not trying to blow lies up your butt just to get you to buy something. I'll show you trades, and the guys know here, if I'm making trades, I'll tell you what I'm in, and I'm happy. I'll spend sometimes more time talking about my losses because that's the most important part. But yeah, I'm happy to show my trades if I make them. I don't do live trades on this program because it's only 30 to 45 minutes, maybe an hour, and I'm not going to spend my time trying to make live trades in a small window like that. But yes. All right, Noam says, puts below 470, we're trading for pennies on the dollar. Let's see, I didn't look at the option chain there, unfortunately. Oh, no problem, Sharif. I hope it's Sharif or Sheriff. We got a lawman in town. Sharif. For that one, Noam, I didn't look at the 470s. I wouldn't imagine they were trading that cheap. If you're trading 470 puts and they're for pennies on the dollar, my guess is you're looking at a weekly option. You don't usually, get put options that are trading at 470, which is pretty much in the money for pennies on the dollar. They're going to be pretty expensive. So I'm not exactly sure what that was about, but anyway. So that's your overall rundown through those top 7 markets, and looking at today's activity, look at something like the triple Qs. Similar picture. We had, all in all, it started off as a pretty decent day for the NASDAQ and then just really gave up the ghost. And this one is obviously much worse. We can see the percentages here, down 0.22% for the S&P, down 1.06. Granted, still not that bad. I mean, a 1% down day for the markets, who cares? This is nothing. It's chump change. It's when we see moves like this, and this is like a 5% down move for the day. Okay, now you're seeing panic selling. The only things here that really are noteworthy to me is how the NASDAQ 100 closed right near its dead lows on very strong volume. Granted, high volume is normal at the end of the day, right? You guys can see here, we can go back into, let's go, this is the 19th right here. And you can see that right near the end, big spike in volume. That said, the volume spike today is well over double what we've seen on a close for the past 3 days. Actually, there's one nice size volume spike here on the, let me get the date for you, the 17th. But other than that, this is a pretty aggressive one. So, what to make of it? What do we think about it going forward? For me, it's just follow your plan. If you're feeling like there's going to be more south side, some weakness out there, then you start to build yourself a short plan. Right now, it still looks strong. I mean, that S&P on the daily, the NASDAQ on the daily, it doesn't look like this is the end. I mean, here's your daily on it. I mean, does that look like the end? No. Could it be the beginning of the end? Absolutely. But how many times have you guys seen me and others, jump aggressively and try to go short on something? I mean, this is a massive engulfing pattern right here for the NASDAQ, right? Huge engulfing pattern, which generally leads to more bearish movement. Well, that said, we're still in a strong uptrend. Don't care what time frame you're looking at. You can look at the weekly, the monthly, the daily, even the hourly. You're still in a pretty strong uptrend. So to me, it's a little risky to think about jumping short. Now, S&P. There was your NASDAQ. Here's your S&P. I mean, this one still looks super strong. Let me get that red line out of there. It still looks very strong. It actually feels like it's starting to potentially form an ascending triangle, even though it has these tall wicks on here. It still looks real strong. So until we start making some new lows, and for the S&P, that's going to be dropping below 46.27. You got to keep staying strong and long. I hate to say it. It's terrible. All right, what else did I have from a question perspective? Let's see. What caused this from Naum? Is the shooting star an app? I want to make sure I get to... Let's look at this one first, and I'll end with the Apple one. As you guys know, I can't trade Apple. But can you look at Electronic Arts today? I bought some at 135, now looking to add more at 125 for Scott. All right, so my first comment's going to be, and Scott, I appreciate you sending in the comment or question. And don't take this the wrong way. I am definitely a tough love kind of person. So I have to ask you, if you wanted to buy EA Sports at 135 and now you're looking to add more at 125, I've got one simple question for you. Was this part of your original plan, or are you now beyond your stop loss and looking to add to a losing position? These are two critical questions, right? If it was part of your initial plan and you said, okay, I'll buy some at 135 and I'll buy some at 125, that's part of my plan. All right, we can look at the chart. If you're in a losing position right now because you bought at 135, you're now down 10 points per share, and you're doing damage control, trying to dollar cost average, then I have a problem, because where's your plan, right? You're now shooting from the hip. You're adding to a losing position that you didn't intend to do. You're deviating from your plan. You didn't really have one to begin with. So where are you at on this one, Scott? If you are in the chat, feel free to type it in. But let's look at the price charts for you. So EA, Electronic Arts. I am actually rather bullish on EA, just as I think the gaming in the metaverse is going to really take off. You can see here, let me get rid of the volume. Take that volume off, makes it look a little cleaner. You know, if I look back on the weekly, and you can just kind of take the big picture here, EA hasn't done much, right? It's just been traversing sideways since, let's call it August, right? Since August, it's really been traversing sideways and more aggressively in a tighter range starting back around February. Just really seems to be traversing back and forth. So doesn't seem like there's a lot of opportunity here with Electronic Arts right now. That said, you know, look what's happened on the weekly. I mean, you come screaming back down into this low point here, which I'll break it apart more with the daily. Yeah. You know, I'm usually not a fan of catching a falling knife unless it's into an area of strong demand. And I would think that you look at this area right now, and this does look like it's actually in an area of strong demand. So, you know, was it Scott that sent that one in? I think that was Scott. Let me see. Scott, you know, adding at 125, I think you got to be okay with that. My comment or my concern is, what are you going to do next? You're already in a losing position. And let's be honest, nobody likes to take a loss, right? So I don't really know why you bought at 135. I mean, I guess you could see this little tiny drop, but this isn't a great spot to buy in. There was really, you see this wicks went through this area multiple times, so I don't know. I don't think 135 was a great spot. This one at 125 looks a lot better. Now, you know, there's a couple of different ways we can do it. I agree with Sharif. Sharif saying put that money into something else, add on a breakout instead. I agree. You know, but Sharif and others, this is the challenge of being a trader, is if you have a plan in place and you say, if this happens, I do this. If that happens, I do this. And it's structured, then it's easy. But if you're shooting from the hip, and I think Scott might be, which is where, hey, I bought a 135 and now I'll add some 125. Now all of a sudden you could find yourself in a position that blows your account. That literally on one trade, you blow your account. And what do I mean by that? Well, if you look at this Electronic Arts, all right, you added, let me take some, move some of these lines. You purchased initially at 135, which is roughly where that first horizontal blue line is. If you wanted to jump back in and add some of this at 125, you're literally at the dead low of what I would deem to be your demand zone, right? And here's where your demand zone on this would be, at least for me. Some of you might draw it different. That's cool. But, oops, get out of there. Stop that. I actually, I hate to say it, I actually like the setup. Hello, Gallo. I like the trade. But if you bought some at 135 and 125, now if it gets below this, and let's say you bought the same amount. So you bought 100 shares at 135, 100 shares at 125. Now, if it drops 50 cents, you're losing $1, right? Because you have double the amount of shares. So your losses are going to accumulate twice as fast. And then what happens on this one, Scott? Well, what if it gets down to here at, let's say, 116 or 117? You say, oh, I'm going to buy some more. Okay. Great. So now what are you going to do? You can buy another 200, so your dollar cost averaging it. Now you've increased your position by 4-fold. Well, what happens if EA keeps dropping? And next thing you know, you find yourself at $87. Your account will probably be blown. So I agree with Sharif. I think you need to kind of move away from something that's aggressively moving against you and just say, here's a line in the sand. For me, that line in the sand would be up here. It'd be just below these most recent lows, probably, let's say, 124. If it gets below 124, I personally would get out of my position, lick my wounds, and move on. But I do like it as a new trade right now at 125. I think that's an appealing one. To have $1 risk on that trade, sure, sounds good. Trading weekly expirations give Robinhood traders a better deal on investment with demand and supply on lower time frames. I take that gamble not from my income, only gamble. Okay. Yeah, I don't use Robinhood. Robinhood is, remember, if something is free, you're the product. So be careful out there with your Robinhood, NJ. Right. So that was question numero dos. How are we doing on time? Oh, wow. It should be a perfect time. And let's see. I had one more question, which I like. So Clint sent in this one, and Clint says, I don't know why my charts look all weird today, or my screens. Let me fix this for you guys. All right. I think that looks a little better. Clint says, is the shooting star on Apple daily chart a strong one? I'm not going to go too in-depth on the different candlestick formations, but, I have done that in the past here. Let's go check out AAPL, which, for everybody knows, I cannot trade Apple. I'm not allowed to trade Apple. It's in my trading plan. It's burned me too many times, so I am not going to trade Apple. However, Clint, I do like your assessment of this. Is this a good one? I would think so, and it actually fits a lot. It checks a lot of boxes. One of the first boxes for me with regards to a shooting star formation or a reversal pattern is a strong, aggressive move in one direction, either up or down, right? So you have that. Apple went from $148 to almost $166 in a period of about a week and a half. Okay, then you have this. At one point, this was a gigantic green candle. Great follow-through, right? Everyone just buying onto the Apple self-driving car. Great, yay, okay, it's awesome. Then all of a sudden, it came ripping back down and closed near the dead lows. Here's their 5 minutes so you can see what it did intraday, right? It was looking strong, and then all of a sudden, whatever happened there, crushed it. And I'm going to do this right now just so you guys can see this. I always make the joke, which is when you have an argument with your significant other, what's the most important word to have? And it's funny because all the guys are usually going, yes, dear, or I'm sorry, or here's a dozen roses, or something like that. As someone who was single for an incredibly long period of time, for me, the most important word to have is the last one, right? I just want to, and that's it. Boom, there's my last word. That's all I got to say. I'm done. If you look at this price chart, if you start off early in the day, right, who had the word? The buyers. They were killing it. They were absolutely destroying the sellers, just ripping this thing to new highs, new highs, new highs, new highs, new highs. Then all of a sudden, you had the, kind of giving some of it back, but it didn't do it aggressively, right? And then, of course, the announcement from Biden about Powell, we see a stronger sell-off. So when you look at this, who won? Who had the last word in this argument? Clearly the sellers. And while it may not seem as evident here on a 5-minute, it screams it on this daily chart. So for Clint, I can't trade Apple because of it's in my trading plan. And how would I? Well, it's pretty simple. At 161.02 is where we're at right now, and I put this little blue line right here. Actually, the low of today's candle, the low is 161 even. So if we open up anywhere in this yellow box area, meaning anywhere above 161 tomorrow, if you open up there and then it starts to trade below it. So this, and again, I got to be careful here because these are my rules. I'm sure other people teach you differently or give you different instruction. That's great. Just make sure you have a plan in place. So if you're wrong, you take your losses and move on. So for me, it has to open up anywhere above this blue line. And then if it trades and starts to come back down, then I have a shorting opportunity. But, it still looks really strong except for today's trading activity. So there is potential short side there on Apple, in my opinion. I actually have a couple of others that look rather similar to this one. So, for example, I can't trade Apple, but I can trade Micron. Well, look at Micron's chart, right? We can get rid of this area. You have almost the exact same picture. It's actually more aggressive here with Micron with this big shooting star. Well, how do we trade that? Put a line right across there. If it opens up above 83.69 and then sells off below it, nice potential short. And actually, you have some unfilled gaps here on Micron technology, which could fill as well. So I like this one actually better than Apple. The only thing that I'd want to see here is adding in volume, right? Adding in volume to see if this is a climactic event. Ideally, on today's candle for Micron, I'd like to see the volume way higher, like just a peak volume. So what's it look like on Apple? No, not way higher. I mean, it's not a deal breaker, but it's just when you see volume 3 or 4 times normal on a shooting star, that's when I pull my Gollum impersonation and like, my precious, yes, right? That's stupid, I know. And then there was one more. So it was Micron Technologies, Apple, and I think HD. Yeah, Home Depot is another one. Now, granted, this isn't as juicy, in my opinion, as the Micron Technologies one, but you can see it had slightly higher volume today, although there's not. It seems to be just slightly above average volume, and you do have a shooting star on this one as well. So there's 3 potential patterns for tomorrow's trading. Right now, I'm looking at 408.65 as the line in the sand for Home Depot. As you can see right now, we're actually below that. We're at 408.61. So if it opens below and keeps selling off, oh well, I don't make the trades. It's like Target. I think we talked about Target last week, and someone was asking about this as a shooting star pattern. Well, it's not a great one at all, but said if it opens up and then trades below it, there's a shorting opportunity. Well, what happened? We gapped down. This is a no trade. Unfortunately, Target just keeps on moving to the south side. I'm not on board. I didn't make this trade because it didn't follow my rules, and that's just the way that I trade. Let's see. Kenny says, I closed out an Apple long call last week that expires next month, and now kicking myself. Well, don't kick yourself, Kenny. Don't kick yourself. Don't kick yourself. It is what it is. You just got to go, oh, well, too bad. Next. I mean, I've got you all beat. I'm going to one-up you on this one. I told you guys about Render Token, right? So Render Token, I've had on my screen sub 1 penny, and I knew a guy who has been mining this stuff, and I just didn't buy. I just forgot. I had so much other transaction stuff going on that wasn't high on my list, and it went from under $1 up to almost $9 in a period of 2 weeks, and I didn't buy any. So I'm actually waiting for the pullback here. If I can get down to about $4.25 on Render, I will buy some, which is crazy thinking I'm paying $4.25 when I could have bought it $1. But you know what? It is what it is. Move on. Don't let it get to you, Kenny. It'll drive you crazy. What does Naum say? I tried to short Robinhood today, and TradeStation said the stock is hard to find. Yes, so, and this isn't just a TradeStation thing as much as I dislike TradeStation. Every brokerage firm has a short list. And so if their customers have a lot of shares of Robinhood, then they'll potentially allow you to short it. If they don't, then it's a hard to borrow list. So what happened is normally you have to call them and contact them personally and be like, hey, this is Merlin. I want to short some Robinhood. They'll be like, okay, how much? And maybe they can find you some. But what the first inclination by most of these firms, and this is the same for Ameritrade, E-Trade, Schwab, Trade, doesn't matter. They're going to say, no, you can't short it, right? It's just a risk management thing to them. But if you call them up, sometimes they will allow you to borrow some shares. Usually it's not a lot. And here is your chart for Robinhood. God, gosh, I wonder why. Do you guys remember on this show, we were talking about shorting Robinhood and like why you should short Robinhood? If it's free and they get cracked down, if we see the sale of order flow stuff change, remember when that whole order flow thing happened? We're going, get out of Robinhood. You want to make money on it? Short Robinhood. Look what a beautiful sell-off this has been. Too bad we didn't get back in when it was above 40. I want to say that was back in August and September when we did that show. Nice. Oh, too bad I didn't follow my own advice and short some Hood. What brokers do I like? I'm bitter. I don't like a lot of them. What do we want to trade? I guess Sharif would be the question there. Believe it or not, I actually like to do my technical analysis on TradeStation. I like their platform the best. I'm not a fan of the company overall. I just feel like they're way too persnickety about accounts, and I've seen them just, not treat customers the best. So I actually do a lot of trades on your retail platform. So I have all the major ones, Schwab and Ameritrade, E-Trade, direct access wise. I had interactive brokers, but I disconnected it when they started charging for dormant accounts because I have so many different accounts that I wasn't using it. All of a sudden, like getting killed by fees. And Interactive Brokers probably has the best fee structure, but their platform is not user-friendly or intuitive. Surprisingly, I don't have a Thinkorswim account. I have a TastyWorks account, but not a Thinkorswim, which I don't know why. I just never have. I used to like TradeStation until they started playing hardball about being a professional trader, blah, 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 and charging me 10x fees, and just they became real jerks about it, so I kind of moved on from that one. So if you're looking at cryptos, I like Kraken, I like Coinbase Pro. If you're looking at futures, I like Trade Pro Futures. Forex, Owanda is really the only account I have left in the spot Forex market. If a share is hard to borrow, just buy puts. That's true, but sometimes, remember, Mario, it kind of goes hand in hand, right? Because if something's hard to borrow, that generally means it's illiquid. There's not a lot of it circulating around, and when that happens, the options market may not be robust either, right? So before you jump in real quick, check the option chain. What you'll probably get on Robinhood options is a very wide spread, because these guys know that you can't short it somewhere else, so they're going to make some extra premium off of you, the retail people, for buying it. So just always check and make sure how wide that spread gets. Marcus says, is the bond market leading the stock market, predicting a decline? Yes. I mean, look, when you look at the two most important numbers in the bond market, that's your 10 and your 20, or 10 and your 30, our yields are creeping back up. Now, granted, it's not super aggressive. It's not like it's ripping to the upside, but if we say the trend is our friend till the bend at the end, which is one of my favorite ones, what's the trend been looking like for the past since April of 2020? Higher lows and the same highs. Now we could in theory, and I'm really roughing this one. All right, this is forcing a chart to tell you what you want to hear, but I just want you guys to think of the overall picture. Granted, it's not perfect, okay, but you guys kind of see an ascending triangle there. So this will be an interesting one. If we get back up to like this 1.7 on the 10-year, if all of a sudden we get a rip above this, you could see some really quick moves. And there have been a lot of financial analysts out there and market veterans like Art Cashin, who's he's one of the few people in the industry that I look up to and go, okay, I love what you had to say about the markets. He said if we get over 2%, shit's going to hit the fan. He's like, it's going to get ugly. Well, we didn't get over 2%. We kissed it back here in late 2020. Now we're down below it. But this trend is telling me that the yields are going to be getting higher. That means the cost of money gets higher, which starts to choke out the economy. And if you look, that's the 10-year. If you look at the 30-year, it doesn't look as good. I guess I'm saying good as in positive to the upside. But it doesn't appear to be making new lows. So the long end is the one that's really concerning me. Hey, quiet. I think we gotta love big dogs here. Yeah, so that 30-year, we did break above, right? We hit 2.5% right there. So this will be interesting to keep an eye on both of these numbers. But yes, I do think I don't know if it's necessarily that it's leading, but the higher that these yields get, right? The higher this 10-year gets, the more expensive loans are going to get, which means fewer people can afford to buy real estate. The higher this 10-year or the 30-year gets, the higher the cost of capital will be for firms to, use money and borrow money to make acquisitions or increase their productivity or inventory, etc. So the cost of money is getting more expensive. And then you have, as Big Eb segued in here, the Dixie, the dollar index, right? And this dollar index has been just screaming. There's only really one major stopping point here for the dollar index, and that's going to be right around this 97.80 mark, right? And it's really not a great supply zone, I'll be honest. But it's the only real area where price aggressively turned is right around 97.50. We're about a full point away from that right now. But, if we get another full point here, a stronger dollar will hurt our markets. It slows down production. It slows down growth. And notice what's happened to the dollar since 2020, right? We had an aggressive sell-off. Now all of a sudden it's basing, and whatever trend we had in place before, it's broken. We're seeing an uptrend form in that US dollar. And if that does continue, then you will start to see these equity markets suffer a little bit. Now, does that mean we run out there and short the hell out of the markets right now? No, I think that's too risky. Do you start maybe to build a small position? I think when you get the signals, right? I would rather be, when I lose big on like market turn events like that, when I lose big is where I go real heavy in all at once. Where I really kick butt is where you start off with here's a small position. And as it starts to go in your favor and you get confirmation that it is in fact doing what you think it is going to do, you're adding more and more and more and more to it. Now the challenge with that, you guys all know this one. If you started off, shorting 1,000 shares of SPY and then you add in another 1,000, another 1,000, another 1,000, well, actually let me go back. If you shorted 1,000 shares of the SPY, the S&P 500, and let's say you had a $1 stop loss, so my maximum loss is $1,000, and it starts to move in your favor, right? Great, and you add another 1,000 shares to it. So now I'm in 2,000 shares. Now all of a sudden I have to reconsider the increment of my stop loss because it could shoot up very quickly, and those 2,000 shares could stop me out even faster. If I add in, say now I'm in 4,000 shares because I've been adding more and more and more. Remember, a $1 move is $4,000 now, whereas before a $1 move was $1,000. So you have to take that into consideration. But once you can really start to snowball into these positions, then that's when you get the big monster winning trades, especially if you get into a nice big trend. Like if you've been buying the dollar or the Dixie or dollar currency pairs, that has been just a beautiful trend right now. So you have great trends going. It looks to me like this trend's going to continue here with the dollar index. And again, the stronger this gets, the more likely you're going to see this one here start to turn and move the other way. Same thing with the NASDAQ, right? And maybe that's part of the jitters today. I mean, today's dollar move, that's pretty aggressive. And if you break it down, lo and behold, most of it happened early on in the morning, right? But it closed near the high. Still looking real strong. So, I think the dollar plays a huge role in this big ebb. Naum says, wait for oil to tumble. Well, the higher the dollar gets, the more of an impact to the downside that's going to have on oil, right? Because remember, foreign entities, it's priced in dollars. So if the dollar keeps rising, that means that someone buying oil with euros has to convert it to dollars and they can buy less. So the stronger that this dollar gets, the less inventory or less supply that they could buy of oil, and that in turn starts to create problems for oil. And maybe might be seeing that right now with crude oil. There you go. All right, I think I went through all of my questions for today. Unfortunately, guys, I did not have time. Let me make sure I had that. Yep, so I got through those 3 questions. And again, I think that there's 3 really nice setups for tomorrow. We have the Apple chart to look at, right? And they're all shooting stars. You got your Apple. Just give you maybe some trade ideas for tomorrow, something to look out for. There's Apple, there's Micron Technology, which I like better than the Apple one. Why? Well, look at the chart of Micron. Micron's been in a downtrend, so this is just a pullback in a downtrend. I like it. Granted, it feels like it may reverse the trend because it's breaking some most recent highs, but you're right there. I like this one. You look at Apple, it's all-time highs, right? It's not as good. Now, granted, there's probably some option plays you could do, but I can't touch Apple, as you guys know. And last one is Home Depot. I think that this one also provides some opportunity. Now, Sharif wants to look at Square. Oh, it's such a hard one for me to short. I just love the company, but boy, we have had this yellow box on here for a while. I guess I can move it forward. Square is coming back into an area where I'd potentially be a buyer right around 200 to maybe 195. But basically what it does is it just shows that bottom end of that range. So if you have this big open range here between 192 and 186, I mean, that's a $90 range. Great opportunity to be using options, whether you're selling puts or buying calls, depending on where we are within that range. Right now, it doesn't look good for Square. Obviously, it's been just getting weaker and weaker going back into July, where it's making lower highs and lower lows. But, I think you can use this as a backstop here right around 195 on it. So I like it. Yep. No, and thank you, Big Ev. There's always so many things to talk about. This, as everybody knows, the markets aren't one-dimensional. It's not like you can say, oh, well, the bond market did this, therefore the entire market crashes. Open up a watch, an old school watch, and look at all those little moving parts, and every single one of them has a job to do, a role to do. And if you take one of those little pieces out, the watch doesn't function anymore. Now, our markets aren't that way. The markets will still function, but it's going to act weird. It'll act differently if one of those pieces gets out of line. So if everything is doing what it should do, markets are predictable. What we know personally and firsthand, for me, markets are never doing exactly what they should do, right? They're always going to be doing something wonky, which means you try to figure out how this piece impacts this one, and that gives us hopefully a better probability. Cool, Sharif. Long term. So let me go real quick and just bring up long term. Long term, I like Square. I think you're going to see more of a movement towards that. But let's go out the bigger time from here at the weekly. The big challenge you have with Square is how much of it is already built in. When I say built in, like they really soared off of the whole COVID quarantine thing, right? More online transactions, the touchless sales, etc. They went from $35 all the way up to about $290. That's a hell of a run. The question I have is there going to be a pullback here that breaks that 192 mark? If it does, I would probably just get out and be selling puts to try to collect some premium as it drops maybe to 139. But yeah, it just feels like it wants to pull back. But long term, if you're holding for long term, I think it's good. I think you're good. On the VIX, all right. So right now with your VIX, you're looking at a 19.16 reading on the VIX. As you can see, we've pretty much been baseline here. And of course, for those that don't know what VIX is, VIX, there's an old mantra. It says when VIX is high, it's time to buy. When VIX is low, it's time to go. Well, that's basically telling you to get out of your positions on the VIX here, right? Usually when you see VIX very low, and again, I don't think 19 is low personally. You start to get down into the single digits, now you're really low on VIX. So we're still historically low at 19. The textbooks will tell you that the 20 and I think it's 20 and 40 are the range-bound marks for VIX, meaning if you did here, there's 20 and 40. If it gets down below 20, then you should think about selling your positions and getting out because the market is just not even thinking about selling off, which means it probably will. And if you have it up above 40, that means the markets have been freaking out and panicking, which of course we saw back here when it rallied all the way up to 85. I personally don't like to use VIX. Back in 2009, it broke. In my opinion, it broke when it shot up so much. Let's go back to 2000. Does it go back that far? When it did this here in 2009, or actually late 2008, when it's broke 40 and kept on going, the challenge I have here is if you were the type of person that says, oh, if it gets above 40, it means I should start buying the market, right? When VIX is high, time to buy. And you start buying the market when it was at 40, and then 50, and then 60, and then 70, and then 80, and then 90. You were dollar cost averaging as this knife was falling like Icarus. So as that happened, this could blow your account. So it's just a fear gauge. Right now, I think what it's just telling us is we are kind of at the norms. We're near lows. Now, does that mean we should be selling our positions? If the market tells you to sell, sell. If VIX tells you to sell, look at the market, right? So that's the dog that wags the tail. This is, to me, is a result of kind of people anticipating market turns. PayPal cheaper than Square, but I'm not standing in front of that crash. Yeah, I actually like Square better, but technically, here's your PayPal on the weekly. It looks like we have actually already looked at this one. I think we looked at this on an earnings talking about when the next time we wanted to buy would be. This is kind of a choppy area of demand. It's not great. If I go back to the daily here, well, let me just see what that zone looks like. I think we actually did map it out for this area right here. None of these are really strong areas of demand. I don't look at any of these and go, wow, that's great. It's great trading opportunity. But it was, I think we looked at it from the perspective of it's got to stall somewhere. And it's been aggressively falling here. So where would the likely turning points be? This is definitely catching that falling knife. What I think you probably could get away with here if you wanted to own PayPal or even Square is because of the aggressiveness of these sell-offs, options premium is going to be higher. So you could be selling puts. And let's say you wanted to own it at, 180. So we're at 189 right now. So that's a $9 move. Well, maybe you could sell weekly options at 180, sell puts, and collect weekly income. And if it gets there, then you're going to own it anyway. And you collect your premium. And you can do the same thing on Square. Similar to your call on Hood. Yeah, Kenny, Rivian, come on. Who thought Rivian was going to keep going? Anybody who held Rivian thought it was going to keep going. Now, again, where is Rivian going to go to, folks? Where do we see it crashing to? Well, remember, the IPO price is 78, and I think I actually have that marked out still here. Yeah, there's your 78 mark, right? Move that up here a little bit. This is where the insiders got their shares at $78. Now, I don't know if it's going to necessarily come all the way back down to 78, but this right here, this increase from 78 to where it opened up at, which was 106.95, that's what you call masterful marketing. They convinced the world to buy Rivian at an unbelievably elevated share price. It was way higher. I mean, like you say, they're barely even producing vehicles. Now they got a market cap bigger than General Motors. Something's wrong here, people. This is smoke and hopium. I hope Rivian succeeds, but it's just you gotta step back and realize you're being the sucker in this one if you bought Rivian and you're buying it at these $170, $160 per share. That's just crazy. All right, as much as Big Eb wants, he's not going to lure me into doing a 1-hour show today because I got too much to do. So, I know we got some new people here. If you are new, hit that subscribe button. That always helps. Again, try to do the show live every day, Monday through Friday at 2 p.m. Pacific time. We're not going to do a show on Thanksgiving. All right, come on, gotta let me watch some football in peace. Also, Friday, I'm probably just going to take the day off anyway and go somewhere and enjoy life, so I hope you guys do the same. We'll probably do a Tuesday and Wednesday show, I think will be the plan. So, if you guys have topics, comments, feedback, things you want me to address, send me an email at TraderMerlin@gmail.com. That's the easiest way to get to me directly. Or if you're watching the archives and you made it this far, just go down below the video, type in your comments into the chat, and I give those ones priority. So if you go to the YouTube channel and you put in there, hey, let's cover this topic, I will bring that one up. Cool. All right, everybody. I'm out with a 57-minute show. So Big Eb, neener. Until Tuesday. Happy trading, everybody. I'll see you tomorrow.